Trustpilot Group shares sit at 259.8p today, after Panmure Liberum downgraded the stock to hold from buy. That alone would read as a simple caution call, except the same note raised its price target to 250p from 235p. A raised target that still sits below the current share price is not a bullish signal dressed as caution. It is the broker stating outright that the stock has already run past where its own numbers say it should be. The underlying business did not disappoint. First-half bookings grew 18%, about 1 point ahead of Panmure Liberum's own forecast, with revenue running 2.1% above estimate. So the downgrade is not a verdict on the business, it is a verdict on the price the market has already paid for it. Trustpilot's enterprise value now trades at 4.3 times 2026 sales, up from 3 times when Panmure Liberum first turned bullish on the stock, the re-rating running faster than the earnings did, which is exactly the gap a valuation-driven downgrade is built to flag. For a holder, that is the pressure point. The fundamentals improved, but the price improved faster, and a rating cut on a beat is a harder signal to read than a rating cut on a miss.
The group beat masks a divisional split that cuts the opposite way in each market. UK constant currency bookings grew 11% against a 15% forecast, a clear miss in Trustpilot's largest geography. North America grew 27% against an 18% forecast, an equally clear beat that carried the entire group number higher. Part of that UK shortfall is not really lost demand. Around 2 percentage points reflect large contract renewals shifting to head offices that get billed out of the US, which mechanically flatters the North American number instead. But even stripping that out, Panmure Liberum still called underlying UK growth about 2 points weaker than expected, tying it to a sales team restructure and general macro drag rather than an accounting quirk. That framing carries a buried assumption. Panmure Liberum treats the North American strength as durable and the UK weakness as fixable, because it is tied to a restructure with an end date. But the same note credits North America's growth partly to April's repackaging, a cheaper starter tier and premium price rises of 30% in the UK and 27% in the US, which is a pricing effect, not a proof that the underlying US market wants more Trustpilot. If that repackaging effect fades, the durable versus temporary split the broker just drew could invert. This is not a debate happening in the abstract. Trustpilot shares already fell 13% on the 17th of July when the trading update first landed, before this week's downgrade note. The market had already voted against the headline number 3 days before the broker explained why.
Panmure Liberum trimmed its 2027 constant currency revenue growth forecast by around 2 points on the back of the UK softness, even while raising its 2026 revenue forecast by about 2% and earnings per share by 3% on the strong first half. The broker is pricing in a UK drag that persists into next year, while still crediting this year's beat. The variable that actually settles this is not the next full-year result, it is the next quarterly UK constant currency bookings number, the same metric that missed by 4 points this quarter. If UK growth recovers toward that 15% run rate, the restructure explanation holds and the valuation gap closes on its own. If it stays stuck near 11%, the sales team disruption looks structural, and the broker's temporary weakness framing breaks. For a holder, this is not a sell signal, but it is a reason to defer adding on strength until that UK number prints again. For someone watching from outside, the 13% drop looks tempting only if the UK segment shows the restructure genuinely working. A stalled UK print at the same 11% pace would confirm the broker's caution rather than create a discount entry. Trustpilot's own broker has effectively split its view down the middle, backing the business while capping the rating. The next UK constant currency bookings figure is what turns that split into a verdict, and until it prints, the position is to watch that single number rather than react to the headline beat or the headline downgrade alone.